Hey guys, welcome back, and I hope your trading week was well. I hope your week was well. And in today's video, I'm going to talk about my morning routine pre-London session, what I always do, or what and everything that I always look for. And let's start the video. The first thing before I even go and start analyzing the market, I always look for news. That's fundamental analysis. I always look for what's really going on in the market, or look for economic calendar. I really like using investing.com, because investing.com, I have like everything in one place. I have economic calendar. I even have like sentiment analysis. I don't always use sentiment analysis that much, but that's another tool to be just there to help me see where the market is, or what are investors doing. Like if you see here, sentiment analysis on SP 500, 55% long, 55% short. That means that this market is almost 50-50, because the big banks now are shorting this pair, and most of retailers are just buying this pair. So I don't always use sentiment analysis that much, but that's just another tool to add on your trading. I do always trade forex, and the second thing that I always go is on my chart, and I do always start with the top down analysis, because I'm a day trader. I do always start for a daily chart. On a daily chart, I do always want to look for previous day candle. Like for example, today I'm filming this video on a Saturday, so this is a Friday candlestick, and this is a Thursday candlestick. So as you see here, the market is like on a supply or resistance level. We have this high on a previous candle, and we have this low on a previous candle. So if our market is really willing to go down, we need the next day the market should take at least that previous low candle in order to go up, because there's stops lying around there. That's the reason why I do always look for daily chart first, because we have daily low, daily high, and then from there I will start going for my other time frame, like 4 hours, 2 hours. Now if you see here, we have this area, we have first rejection, the market came, and then we have second rejection. This is like a equal high, or like a double top. After I've noticed that the market is willing to go down, I'll drop to a lower time frame, like 15-minute time frame. I go to a 15-minute time frame, and before I even start analyzing the lower time frame, I always look for a previous session, like Asian session, because I want to know how the Asian low was, or the Asian high was, because if a market is consolidating on a Asian session, I want the market to break either the high of the session or the low of the session, to confirm that the market is going down or the market is going up. I always mark my previous high and low session. After that, I will drop to my lower time frame, that is 15. I don't always enter on a 15 time frame. That's just to look for where is the market going. And at first we have imbalance here. The market broke this structure, came, retested this structure. We have a drop the market formed another imbalance. Then the market came, retested the same supply area. Now I will, after I have mark up like that area, that's like it's like a supply area. I'll drop to a 5 minutes to look for fair value gaps, for fair value gap fields. Or then now this is the same. We have this supply area. The market came retested. We have the market came retested. Now on a I can now on a 15 on a 5 minute, we have like a little imbalance around here. We have like a little imbalance. Let's see if you can see. We have like a imbalance here. Now okay, we have this imbalance here on a 5 minute. I'll drop on a 3 minute time frame. On a 3 minute time frame, you can see clearly that imbalance. Now I will wait the market. I'll wait for a market to come and tap that imbalance. Now I'll do my entry. If I'm going short, I'll put my sell position there. And now when it's come to stop loss, I'll put above here or just around that area, because after the market has formed an imbalance, that the market can feel that imbalance, that means the market is not willing to go and take out this high. Of course the market can do that, but after you have that imbalance, the market can feel. And if you see this trade is like, and if you see this trade was like a 13 pip stop loss, that's at least a reasonable stop loss, a very low stop loss, and targeting maybe a 4 hour low. See here. If you see, we have that area, and we have that area, and we have this imbalance. So I'll be looking for these two areas to take my profit. That is how I always analyze my market before the market open. I do always enter my trade only on London session, because that is where we have a lot of liquidity, we have a lot of move. So the first thing I always do is wake up in the morning during the pre-London session, go look at some economic calendar, some news, and from there maybe I look for sentiment, how this pair is performing, or where is the general bias from other investors, from big